What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Melanie McDaniel. How are you doing today, Melanie?
I'm good.
All right, awesome. It's great to see you, and I'm in a great mood because I've got my favorite audience member in the audience watching today. And why is my favorite audience member watching? It's because this is a chance encounter. I interview commercial real estate investors, and I find out of the 5 different distinct motivations, which one best describes my guest. And then I go through the 6 different roles in a commercial deal to find out their core competency. And if you want one of these guys to learn how to express yourself and communicate effectively on the topic of commercial real estate, you can go to dandoesdeals.com. There's a little thing to print it out. It doesn't even ask for your email address, which from a marketing perspective, that's a really bad idea that I don't do that. But hey, I guess I was feeling generous. So you can go there and print out your own one. But before we get too ahead of ourselves, Melanie, can you please introduce yourself to the audience, please?
Sure. My name is Melanie McDaniel. I have a fund. It's called Freestyle Fund. And I do real estate, lots of different asset classes and geographies. And I find operators with excellent deals and help investors get into deals that aren't always syndications. They could be joint ventures, private. They're all private equity deals. So that is what I do.
Excellent, excellent. So we'll unravel that for the beginners in a moment. And first I'll hit this, and then I'll hit that. And then, of course, it's not going to pop up in a timely manner, so I have to hit this, and then I have to hit that, and then ta-da! We go through the motivations first because sometimes I have some newbies on the show and they'll at least know why they are involved in commercial real estate, even if they don't know what role they're going to be playing. Melanie's already got that shoot away. She actually just described it. But as far as the motivations go, the 5 are, first one is preserving your purchasing power. Okay, that means if you already rely on your assets, the cash flow from your assets to make your ends meet, the biggest concern you have is making sure that inflation doesn't spoil the party. What's the fix? You have to keep on making acquisitions to make ends meet. So that is the first motivation, but that doesn't describe me particularly well. But trading time for wealth is a priority. That's definitely my motivation. I realized as a high earner from tech that I'm giving away half of what I make to income tax. And so I'm going, well, how do I pivot and then accumulate the equity instead of getting the high wage and giving it away to tax? So that's why I pivoted into commercial real estate. But a lot of people get involved in this because they're fast tracking their retirement. That also really means taking more control of your time. So maybe it's working fewer months per year or weeks per month or hours per week. But no matter what, this is like a winding down, which is in stark contrast to the next 2 groups. The next one being that they're so ambitious, they want to buy their entire hometown. They want to have that generational wealth and make sure that their great-grandchildren never have to hold a day job. But that is different from the last group, which they probably have chosen the sector of society, or maybe it's the environment or animals or something, but they recognize that accumulating wealth is by far the most effective vehicle in making a real impact in society and in the world. So that's why they're doing it. But of those 5 different motivations, Melanie, I know that you've taken charge of a lot of your time. You do a lot of world traveling, or at least in the Americas anyway, that I recall. But what of those motivations really resonate with you? What combination of them?
So definitely the trading time for money is what got me out of my federal job to begin with. I realized I was trading my time for money and working toward a retirement with basically a cap. Like there was only so far I was going to go in the federal government. And when I realized that after reading Rich Dad Poor Dad, it pretty much pissed me off because I think I'm meant for more. And then also, if you're paying less in taxes, then you're keeping more, right? It's not always about making more, it's about keeping more. And if you look at the tax code, the government tells us exactly what they want us to do. How do they tell us that? They tell us because of tax credits or reduction in taxes or whatever. They're saying, go build America, go build places for people to live, go build industrial space, go build. They want us to build our country. Why? Because the projects, which is the government building housing, doesn't ever seem to work. So I'm just being a good US citizen by going and doing what the government tells me to do.
I completely agree, and I think that we need more PR as an industry because we get this bad reputation, and I don't think it's really warranted because the government really is outsourcing their job to us because they're supposed to be the stewards of the land and the people, and we're kind of doing both in a lot of ways if we're doing our jobs, right? But anyway, let's get into the specifics of the different rules. Once again, you can go to dandoesdeals.com and download and print out your own one of these, and it's prettier than this. This is the older version with the ugly logo and all that kind of stuff. But we're going to go through each of the different rules so that we can find what Melanie's core competencies are. And the first one I like to explain is the repositioner because I think it's the most intuitive. They look at a whole bunch of different buildings. They look at a whole bunch of paperwork and all that kind of stuff. And why are they doing that? Well, they need to be the acquisitions person. They need to find more properties. And what they're doing once they look at them is it's a fancy word, they underwrite the property, which means they're doing the math, they're doing the arithmetic. They're saying, does this business actually make the money that the seller says it is? And they're also looking for upside. So how do they find upside? In other words, making more money from that property than it is right now. The first one is you can have more efficient operations. You can stop those Benjamins from going down the toilet. But of course, operations is more than just unclogging toilets and collecting rents. It's also other types of maintenance. There's also a marketing component, which is one of my fortes, to make sure that the vacancy rate stays low. But bookkeeping, all that kind of stuff, once you get into more efficiency in your operations, that'll only go so far. So very often a repositioner also needs to find upside with a contractor team. They fix the place up, they make it nicer, so that way they can charge more in rent. That's upside. But if you're like me and you're from the internet, these three are not going to be enough. I also need a local because I'm from the internet, as I say. So you need to have somebody who can be there in an hour or two. And then that way they're keep making sure that the contractor team isn't cutting any corners. They're finishing in time. And then same goes for the operations, that they're not cutting corners and all that sort of stuff. And if you lined up all of these people next to each other and you asked a tenant, okay, so who are all those people? They say, oh, those are the owners. But it's not that simple. You have to have the banks involved, the capital raisers, all of these different people that only deal with money. They are the financiers. And the financiers, when you come to them with this property that you've found with the upside, they're going to say, hey, wait a second, there's one piece of this puzzle that you haven't mentioned, which is who's the sponsor? Who's the KP? And what that's all about is if you want to be eligible for the loan, somebody in the fold has to already own a similar asset. So even if you're Elon Musk, if you want to buy a 350 unit apartment complex and you want to get a loan, to be eligible, somebody in the fold has to already own a similar asset. You also have to have a certain amount of liquidity, and you also have to have a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So Melanie, what are your core competencies? You mentioned that you've got your fund, which makes you a form of financier, but how would you describe it yourself?
That's it, money. So I'm a fund manager. So there's an operations piece in buying an apartment complex, but there's also an operations piece and management piece within the fund. But the fund itself is the money piece. It is the capital. So there are investors in the fund, and my fund is a fund of funds. So my fund puts money into other sponsors' deals. But there are some very important pieces. The acquisitions, don't do it, don't like it, or the operations. But I have to underwrite and make sure, one, the sponsor has a track record, they can do what they need. I check their underwriting and make sure the deal is good. I look at their operations, their business plan, make sure that's solid. And then of course I do the market research, and then I look at the whole thing structured before I will ever bring money into a deal. But it's the same. Banks do underwriting, banks do background checks on sponsors, banks make sure people have a track record, and everything that you mentioned. I don't do the thing, but I vet the whole project before sending capital to it. Yes.
Great. Yeah, exactly. It's like kind of being a curator of deals, like in a museum, picking which pieces of art or whatever. Now, one of my favorite things about commercial real estate is how helpful everybody is. And I chalk that up to the fact that you've got all these different roles. You've got, like some of these, most of them need different personality types. So it's very unusual to have somebody who spent much of any time doing all of them, but people tend to focus on one or the other. But because of that nature, we're all in commercial real estate, we're all better suited to help some people than others. Me personally, because of my marketing and my digital background with CRMs, I can help sponsors and KPs much better. Financiers are always great for me to meet as well, but those are the two that I'm generally looking for. And so Melanie, as far as who the person you can help in commercial real estate more than anybody else, can you describe them for a bit?
Well, I'm looking always for great sponsors with deals. They've already gone and found the deal and secured it and done all that stuff. And now they need capital partner. They need financiers. So I'm always looking for those people. Then of course I'm always looking for the investors who are either don't know how or too lazy to do their own due diligence. I mean, they need to do some to an extent, but I do all of that on behalf of my investors in my fund. So yeah, both of those things, sponsors
Right.
and investors.
Right, and you're the curator. You're finding the good ones, and that's your job, is to make sure you can tell the difference, because there's always deals. You go to enough brokers, there's always
Oh,
going to
yeah.
be deals, but how do you tell one from the other? Well, it takes some time. So the next question is then, as far as you were saying the investment amount. Usually, I talk about the ideal property, and when commercial real estate investors are asking about a buy box or an ideal property, they're really asking for, I'd say, three and a half things. The first one's the geography. So what states are you interested, or what counties are you interested in? The next one is the unit count. So we're really also talking about asset type. I keep on implying that we're always talking about multifamily, but it could be self-storage or other things when they all have unit amounts, right? Unit counts. And then the third one is class. And class, I don't like the fact that they use the same word and the same rating system for two different things, but one of them is talking about the area that the property's in, like how close is it to schools and what's the crime rate. And then the other version of class is the quality and the condition of the actual property, like is it all messed up or something. And for both of them, it's just like in grade school where it's like A plus, B minus, that sort of thing. So Melanie, are you able to say like an ideal property, or is it more about meat on the bone for you?
So in general, my fund is a diversified fund, and my goal is to get people in 4 different things, different operators, different geographies, different asset classes, and different investment strategies. And investment strategies meaning, are they more cash flow, or are they more risky upside type stuff? And creating a diversified portfolio with everything that's going on in the world, inflation, interest rates, unknowns, wars. I think it's time to be diversified. And we saw what happened with COVID, what happened, multifamily did fine, but there were some properties that struggled. Industrial became the rock star. Retail went to the tank. Office, it has, who knows the reshaping of office. So if you were all in an office, or all in one thing, maybe you would have been happier all in on industrial. But what if, right? So I believe in diversification. So I can't give you, it would take forever to go through specifics, but multifamily, I like the smile states, right? North Carolina up to even Idaho, smiling through the warm states and where everybody's moving to. I like politically friendly states that lean more toward landlords when we're talking about residential real estate. If I'm looking at industrial, I want business friendly. I don't care politically what it is as far as residential, because it doesn't apply. And that's the same for storage. Almost anything that it doesn't involve somebody living in it. If it's a business, then it's fine. Or storage units don't fall under that either. So I don't care too much about that.
Mm-hmm.
Economic growth, all the drivers, the market, jobs, population, household formation, just all of that stuff. But cash flow, I'm leaning more toward triple net and industrial, and even office right now, since office took a hit. There's a new face of office, suburbia office. So I'm open really to any asset class. It's all things considered. The strength of the sponsor. If you win the sponsor, you bet on the jockey, you're probably going to have a good deal, asset class, location, anything. The underwriting, of course, I underwrite conservatively, or I don't. My partner does, and he's an institutional underwriter, so I have that going for me. The asset class, it needs to make sense. It needs to have upside. It needs to fit in the economic, space as far as predictions, and I don't know. I listen to a lot of economists, and my favorite thing when I go to a conference is the economic update. I am such a nerd because I'm not an economist. I have to listen to them. They're the professionals. And then business and investment strategies. People want cash flow. Are they trying to live off cash flow? Are they younger? They love their job. They want some more of that upside, and they're willing to take on a little bit of risk for that. Just diversified all around. So hopefully that answered your question, not specifically, but
Yeah, it was great. I got a vector to try and clear up the only last question in my mind, which is like, I know a lot of mortgage brokers, for example, like circa a year or two ago, they wouldn't look at it unless it was a purchase price of over $1 million. And so maybe we can, pin it down a little bit more. Cause I know you don't want to be dealing with a bunch of, like $5,000 properties or something, just like itty bitty where it's a bunch of administration and it's not. So like, do you have some sort of ideal like a cutoff as far as like, I won't be able to help you much if it's like only like $500,000 or something, or are you pretty open for people reaching out?
I'm open, not for like single family homes or, hey, I want to do a flip, or I need hard money, or I want to do my first short-term rental. Nothing like that. It needs to be institutional grade. The operator needs to have done multiple deals, preferably with multiple exits. But I'm doing 2 back-to-back triple net deals that the raise is only like 600 on one and 275 on another. So for someone that might seem small, like the 275 one, but the operator is just a stellar human. And maybe if I get 3 investors in that, it's fine. It's a joint venture. It's not a syndication. There's no overhead costs. My fund is the security. So we don't need to spend a bunch of money putting together a syndication. So I would say if I can't write $1 million check, then it needs to have something really special about it. And probably it needs to be the operator that's special.
Awesome. I love that way of putting it. And as far as the best way to reach out to you, like we met through the meetups, I see you on LinkedIn a lot. Is LinkedIn the best way? Is there a website that's better? Or
so LinkedIn, Instagram, and Facebook is kind of where I post everything. Melanie at Freestyle Capital Group is an email that I check on the daily, and Melanie at freestylecapital.fund is another email specific to the fund. So I'm pretty easy to find.
All right, excellent. And there's only one other thing left, which is actually, it's not for you, it's for you in the, sorry for pointing, it's for you in the camera though. If you look under my left hand, if you're on a phone, you might see like just red text, but on desktop, it's ugly. It's a red button. It's just like, I hate this red button. And the only way to get rid of this awful red button is to click on it and turn it gray. I call it the gray button of tranquility. And see, the wonderful thing about the gray button of tranquility is that it means that YouTube will start to pay for these videos instead of me. That's better, right? And it costs you nothing. All it means is that my videos might show up on your list of suggestions. There's no guarantee about that, but you don't even have to watch those suggestions. You've done me an enormous favor by watching and hitting the subscribe button. Just like Melanie, you've done me an enormous favor by joining me today. This has been great.
Thank you. It was fun.
Awesome.